If you want to learn more about the formulas and theories I use when I analyze companies, go check my website whattheinvest.com. There's a link in the description of this video, and in the section blog you will see a lot of articles in which I describe the formulas that I find most useful. So go check it out. Hey guys, how are you? Hope you're having a nice weekend. And today we'll discuss one of my favorite companies, and it couldn't be other than Berkshire Hathaway. For some of you, you know this company, but for others it's totally unknown. But that's the reason of this video, to show you, if you have no idea about what Berkshire Hathaway is, probably you will discover your favorite stock. And I will show you some points that are key to make a decision if you want to buy this stock or not. Okay, so let's do it. Okay, so here, well, I have my iPad in here, so because it's impossible to memorize all the information, at least for now. And first, I'd like to talk about what Berkshire Hathaway is. Well, as I said, it's a company, of course, an American company based in Omaha, Nebraska, the United States, of course. And one of the most interesting facts about this company is that it's run by the legendary investor Warren Buffett, along with his partner Charlie Munger. For some of you, they are well known, but for others, just I want to say that they are the greatest investors of all time, at least for me. So according to the annual report, the last annual report corresponding to the fiscal year 2019, Berkshire Hathaway is a holding company owning subsidiaries engaged in a large number of diverse business activities. The most important of these are insurance businesses conducted on both a primary basis and a reinsurance basis, a freight rail transportation business, and a group of utility and energy generation and distribution businesses. Okay? Berkshire also owns and operates numerous other businesses engaged in a variety of activities. And one of these businesses are Geico, or Geico, I don't know the pronunciation in English, sorry, Geico, it's an insurance company, Berkshire Hathaway Reinsurance Group, Berkshire Hathaway Primary Group, Burlington Northern Santa Fe, I think that's the name, it's a trains. Berkshire Hathaway Energy, that includes Pacific Corp, Mid-American Energy Company, NV Energy, Fruit of the Loom, Duracell Company, McLean Company, Flight Safety International, NetJets, Dairy Queen, and the Kraft Heinz Company. Actually, Berkshire Hathaway only owns 26.6% of Kraft Heinz to this date. Okay, and also at the same time, the company also owns large percentages of public companies such as Apple, Coca-Cola, American Express, etc. One of the most interesting things about this company is its board of directors that consists of Warren Buffett and Charlie Munger. I really encourage you to look for information about these two investors. You will find them very useful. Now, let's talk about the company, the performance of the company, okay? First, we have to know that there is a new accounting principle. Now, companies have to report in their earnings statement the value of their holdings of other companies. For example, let's imagine that Berkshire Hathaway owns 10% of Walmart, and Walmart is valued at $500 billion, okay? So as they own 10% of it, their market share that corresponds to Berkshire is $50 billion. So they have to reflect that $50 billion in their earnings statement. What I'm trying to say with this is that, as you're seeing on the screen right now, there's a graph, and the green line reflects the earnings per share trailing 12 months multiplied by 15. Why multiply by 15? Just to make it easier to look at. Okay, and in red we have the before taxes per share, so earnings before taxes per share. Then the same, trailing 12 months and whatever. Okay, as we can see, from 2012 until 2018, we could see like that the earnings were kind of regular, okay? But from 2018 on, they've been very volatile because of this new accounting principle. So it's no point in using any of the formulas such as PR or any others to decide if the stock is cheap or expensive. Okay. The interesting thing in here is that, as I said, the red line reflects the price divided by earnings before taxes per share. But the difference with the normal one is that from 2018 I took out the earnings from the investment and derivative gains. So these reflect just the earnings before taxes that corresponds to Berkshire Hathaway, the company, without counting the market value of their holdings. As you see on your screen, you have a table that reflects the earnings of the company from fiscal year 2014 until fiscal year 2019. We can see the net revenues that have been increasing all years. Then we have the, as I said, when you see invest and one, that invest is below, corresponds to investment and derivative contract gains or losses. That was the thing I was explaining before. And you have that for fiscal year 2019, you have $72 billion, and in fiscal year 2018 you have minus $22 billion. Then you have C and E that corresponds to costs and expenses. Before and two, that means earnings before income taxes. And for fiscal year 2019 and 2018, I'm excluding, as I said, investment and derivative contract gains, but I'm including equity method earnings. And why did I do this? Because if you look at just at the before tax row, you can see that for this last year it was $102 billion, and then fiscal 2018 $4 billion, and then 23 billion, 33 billion. So it's not regular, and it's more difficult to analyze the company. So for the purpose of making it easier for us, I created this section called this before and two, and we can use that one. And from 2017 backwards, we can use the before taxes as usual. So we have $30 billion, before that 26 billion, then 23 billion, 33, 34, etc. Now, on your screen you have a segments of operations. We have insurance, BNSF, BHE, manufacturing, McLean, services, financials, and recognition and total revenues. And below the table you have the description of what does BHE means, on service and whatever. And now you can see the percentage that corresponds to, the percentage of earnings that corresponds to each segment regarding the total revenues. For example, insurance, we can see that for fiscal year 2019, insurance corresponds to 26.5% of the total earnings, and BNSF 9.24%, and BHE 790, manufacturing 2464, and that's it. The reason I am showing you this is because I want you to realize that for example, of course, Berkshire Hathaway relies a lot on insurance operations, but if there is a bad year in insurance, it won't be a horrible year for Berkshire Hathaway, the company, because it just accounts for around 25% of earnings. So that means there is a kind of good diversification inside the company. And now you can see some investments that Berkshire Hathaway has, including what's the value of their holdings in Apple, in Bank of America, Coca-Cola, and Wells Fargo. Actually, just to know about it. Then we have the balance sheet. In the screen you can see that there are large amounts of cash and equivalents and in short-term investments in US Treasury bills. In here the most important thing to look at is the total. It's the fourth row in the table. We have total, and for fiscal year 2019 we have $127 billion, for 2018 $111 billion, 2017 $115, and we can see that if Berkshire Hathaway have been accumulating cash basically, because short-term investments in US Treasury bills is basically cash. Okay. Why is that important? Well, mainly because Berkshire Hathaway, they invest a lot of money in the stock market, in public companies, or by buying new businesses. Knowing the mentality of Warren Buffett, or his investing philosophy, we can see that he hadn't found any good opportunities to put this money to work. Probably because prices on the stock market were too high, or just because he couldn't find good businesses. So this is, I'd say, good news, because as soon as there is a correction in the stock market, Berkshire Hathaway will have money to invest, and that's very good. And also, if there is some kind of financial crisis, as it was in 2008, we know that Berkshire Hathaway will be able to survive. Now we have the per share data for Class B stock. Just to let you know, Class B stock corresponds to 1/1500th of a Class A stock. So we have some data in here, but the most important thing I want you to notice is the last row that says sell. That's the selling percentage premium of equity. That means because one parameter that it's convenient to use at the time of analyzing, or at the time of determining if the company is selling at a good or at a bad price, is to check what's the percentage premium that investors are paying in comparison with the equity. And we have that for 2019 it was selling, that day, at that price stock of $221.69, it was selling at a premium of 26.78%. What is interesting of this is that now, yesterday, 9 of March, the stock price was $193. That means that the company was selling at a premium of only 10%. So we can see that it was a very, very, very good opportunity to buy Berkshire. I don't know what the price of the stock will be when you watch this video, but probably it would be good if you use this data. Also, we have the cash equivalents per share and the equity per share, as I said, and that's it. Cash flows is very important to look at because it can tell you the insights of the company, if they are acquiring too much debt, or actually how they are financing their business, and if they are getting enough money because of it, due to its operations. And I want you to notice this: cash flows from financing. You have in the table in front of you, and we can see in the 8th row stock. That means acquisition of treasury stock. Prior to 2018, the company Berkshire Hathaway had a policy of repurchasing its stock. I think it was just if they could buy it at no more than a 20% premium over equity. I think it was over equity 20%. But now, in 2018, Warren Buffett, along with the other directors, decided to change this and I think that now they can make repurchases if they think that that they are acquiring the shares at a good price. We can see that Berkshire Hathaway has been buying their shares and basically enhancing the shareholder value. So now, as a conclusion, right now, beginning of March, we're kind of experimenting some changes in the world, and people is very afraid, especially in the stock market. Along with the rest of the companies, Berkshire Hathaway was affected by this coronavirus, and that's the reason it's selling at such a low price. I'm repeating again, at today's price, or yesterday's price of $193. Is it worth it? I mean, is it a good price? Well, if you think about it, of course this coronavirus affects, I'd say, almost all companies, but, and this is my opinion, just in the short term, I mean for this year. But whenever you buy a share, at least this is what I recommend, is that you have to think that you have to own the share for a very long time. And I hope that this coronavirus won't last for too long. So in about 3 years, nobody will remember what happened. I hope so. And yeah, in 3 years, the business world will be recovered, and you will look past and will see and will think that today was a very good time to buy the stock, if you think long term. And of course, it's as I said, it's an excellent opportunity to buy the stock because of the selling premium that you're buying it, and it's just 10% over equity. 10%, that's very low. And also another reason to buy the stock, it's the cash equivalents and the short-term investments in treasury bills, because there's a lot of money that Berkshire can invest in other companies or other businesses. Also, as I said almost at the beginning, revenues are growing year after year, and probably the most important point to buy the stock, it's because of its management. If you think about it, Warren Buffett knows how to use money. He knows where to invest. He's been showing that for the last 60 years. So I really believe in him, that he can do a very good job in the future. And some people will say, yeah, but soon he will know there will be another CEO. Well, what's good about it is that I'm pretty sure that Warren Buffett has been training the next CEO, and this next chairman will invest almost, I'd say, very similar as Warren Buffett. So we can think that Berkshire will be the same company after Warren Buffett and Charlie Munger. And I hope that they keep running the company for the next 20, 30, 40 years. That would be amazing, actually. So yes, I recommend the stock, but please check the price. At today's price, it's perfect, it's a must buy. But check at how much premium is the stock selling at the time you're watching this video. And of course, actually this video won't be in here for more than 3 months, because I will update it with the following earnings report that will be in May. I don't think that things gonna change too much in these 2 months, at least the price. So make your own judgment, use the data I showed you, and just try to make a good decision. Okay, and that's it. Thank you so much for watching, and I'll see you in next video. So